Welcome to a new episode of the Opening Bid Unfiltered podcast. I'm Yahoo Finance executive editor Brian Sozzi, coming to you from the NASDAQ in Times Square. Really jazzed about our special guest for this episode. It's Jason Stein, co-founder and managing partner at SC Holdings. Jason, it's good to see you in the flesh. Appreciate you joining us.
Good to be here, Brian. Thanks for having me.
So take us, for those not, I guess, familiar with what you invest in, how you invest in it, take us through what the portfolio looks like today. Because I originally came across, what you have done with Athletic Greens or AG1, Hyperice, front office sports, but take us through what you've been working on.
Sure. So we invest across consumer, hospitality, sports, and entertainment. So we have investments across all of those sectors. We generally only invest in growing profitable businesses, so middle to later stage businesses that still have a lot of room to grow, but are far past the early stage, venture stage, Series A stage. We've had investments in the companies, like you said, like front office sports, much earlier on. We exited that to Redbird last year, and Jeff Zucker. We were investors in AG1, formerly known as Athletic Greens, which has been a really wonderful investment and journey for us thus far. We have another consumer wellness product called Circle, spelled CIRKUL, which is a water bottle with a flavor cartridge that goes inside and went viral on TikTok. You may have seen it there.
Wait, you're behind Circle?
Yes.
Wow. Okay.
Yes.
Interesting.
It's another one that's had a wonderful run for us, and but both of those products speak to something that's very important to us, which is format innovation. AG1 did not invent vitamins or probiotics, prebiotics, minerals, supplements. That's a $250 billion market. They simply took a lot of most important ones that you take every day, put it into a powder, combined all of them, so you don't have to have 50 different pills in the morning, and somehow made it taste good. And so to us, that's we're not looking to reinvent new categories. That's for venture capital. We like categories that are really, really big and companies that have some unique format innovation inside of them. And certainly AG1 is that, and Circle also is it's every soda, water, flavored water, carbonated beverage that you could have in a capsule that goes inside your water bottle.
What is the play, or first of all, you've been early in a lot of things, Athletic Greens, a lot of the names when I was going through your portfolio. What did you identify a couple of years ago that's now starting to take fruition? You see companies like an AG1 getting an even higher valuation today.
Yeah, it's interesting. So it feels early, but AG1 was around for 10 years before we ever invested. We were the first outside capital, institutional capital that came in. They had a couple very small friends and family rounds along the way. So they were 10 years in, and they had grown linearly for all 10 of those years until COVID. And so that they doubled during 2020 to about 50 million of revenue at the time. And so everyone we're talking to, our investors and others in the industry, are like, oh, this has to be a COVID bump. Why else would it double all of a sudden? This is going to be a fad. Everyone's at home worried about getting sick, ordering stuff online. Of course, it doubled. And what we saw was a really, really sticky customer base by going through all of their data, their cohorts of people. And when customers signed up, they weren't leaving. This goes back for many, many years. It just so happened that it increased more during COVID, but those people were sticking around. And so it's really a matter of looking at the data and understanding the stickiness of the business. And it's something I've been doing for my whole career, even before I was an investor. I mean, when I first started out, investing had always been my passion from a young age. I was obsessed with the stock market. When Facebook was IPOing, I'm sure you remember, but everybody thought this thing was a fad. Ads don't work. It doesn't work on mobile. Why would anyone invest in an ad on social media? And I was following that as an investor, and I said, there's got to be a way to build a business in this space. And I started my first business at the time. This was started the business in 2010, really took off in 2011, 2012. And we were managing social media channels for Fortune 500 brands, Nike, Beachbody at Apple, Amazon, and building out what became huge parts of their businesses for them, infrastructure inside their companies, and all the creative work alongside of it. Um, and I just remember looking at the data and seeing people were spending so much time on these channels, and they were clicking on the ads and they were actually working, but everyone just decided that it was a fad. And so I think you just have to look at the data, ignore all the media, uh, all the noise around the naysayers if you have actual hard data around it.
I was thinking about some of the products that you're invested in. Athletic Greens, I take it daily. It works for me. When I order the stuff, it comes in a nice glass bottle with a silver cap on it. I mean, I dig it. It makes me feel like a premium human being. I have a bunch of recovery products from a competitor. We won't mention them. Nonetheless, I have them. Is the play there folks such as myself, like the aging millennial that in their head thinks they are an athlete or they want to be an athlete?
There's a huge market in that person for sure. But you'd be surprised how many young people or how many older people are taking and using these products for all the same reasons. Longevity is becoming an important topic for people of all ages now, and they're focusing on it more. When we invested in Athletic Greens, I mentioned they were in the 50 million revenue range. That business has more than 10x since that time period, over 600 million of revenue now, which they've publicly disclosed, and it's a profitable business, it's a growing business. And at the time, there was only one product, so that was the question: who would take this? How big could it get? And obviously, it's proven that it can get pretty big. But now beyond that, it's that people want more than just energy. They're now sleep is becoming a huge topic in terms of longevity and wellness and recovery and preventing illness. And so AG is coming out with AGZ, which will be coming out in the next month, actually. And if you like AG1, I think you'll also really love this. I've been a guinea pig for it for the last year. I get to test all of the things that may or may not come out for them. It's my favorite thing to do.
So Jason, you wake up jumping out of your bed after you take these vitamins. Because I asked you that because I started taking recently like sleep-oriented vitamins. I do feel like I wake up better. But I mean, to your point, it seems like the recovery market, it almost has no boundaries. It may sound ridiculous, but I mean, there's so many growth opportunities left.
I just view it as wellness overall, and recovery is a huge part of it. And if you go to bed feeling good and you sleep well, you're going to wake up feeling good. And that is the whole point of this product. It's not just doesn't make you sleep well, but doesn't make you wake up well. And I agree that the capacity for this market to grow is quite large. The supplement market alone is a $250 billion market today. It's forecasted to double by 2033. That's pretty massive. And I think people are just realizing of all the stupid things we all spend money on, Labubu's and yeah.
Oh, you don't have any of those. No way you have. You don't have.
I have 3 kids under 10. I have way too many Labubu's.
Oh wow.
But why wouldn't we be spending way more on health? One of our investments is in a company called Atria, which is a concierge medicine business based in Manhattan, founded by Alan Tisch, and it's just providing all the most cutting edge medical services to people who want to spend on that as opposed to other things. And I think it's funny talking about Labubu's. Everyone always says, "Is this a fad? The things we invest in, right? AG1, Circle, our kids going to keep doing it, taking it, and it will continue to be popular online." And a fad to me is something that has no utility, right? Beanie Babies, most NFTs, Labubu's, right? Labubu's will come and go. There's no question. I will bet any amount of money on it. People don't realize they've been around for 10 years. It's a Chinese company that has been making them, and there's no point to them. They're cute, just like Beanie Babies were cute.
You are so getting dragged on X or on TikTok. I like them. I'm not saying anything. I'm not getting in this conversation, man.
I love Labubu's. My 7-year-old daughter loves them. I bought way too many of them for her. I'm just saying it will last for a while and it will go. And it's because there's no utility to it.
What is an AG1 given the growth? Well, first of all, how much is it valued now at? And then what's the most likely exit for a company like that?
So it hasn't been valued in a bit of time. The last round, which was a couple of years ago, led by Rick Gerson at Alpha Wave, was north of $1 billion. I think it was 1.2 or $1.3 billion valuation, and the business has grown exponentially since that time period. So we can all do the math. And the exit is anywhere from strategics who want to be in this space and own one of the largest, probably the largest independent direct-to-consumer business today, if not only in supplements, in all businesses independently. And now they're also at Costco. So now there's a clear path to large scale distribution at retail. They're having a really great experience in all 600 domestic Costco stores so far. And so they've gone from this single product business, just one powder that it was selling, to multiple products with sleep coming out and new flavors coming out, and multiple distribution points. I think that would be very appealing to many strategic investors. We can all guess which ones, and then of course the option is IPO. This is a business with significant scale, healthy margins, healthy EBITDA, good predictability because of the D2C business, and so we'll see.
Mm-hmm. All right, hang with this, Jason. We're going to go off for a quick break. We'll be right back on Opening Bid Unfiltered. Welcome back to Opening Bid Unfiltered here at the NASDAQ in Times Square. Having a great chat here with Jason Stein, co-founder and managing partner at SC Holdings, really making some big investments in AG1, Hyperice, and many other names. Does the IPO is that still the end-all, be-all, Jason? Does it still have that level of excitement for the companies that you're invested in, or are they inclined to stay private for longer?
I don't think the IPO is the be all and end all. Actually, I don't think there are a lot of companies who should IPO. I think you have to be a very specific type of company, and you really need to be able to have meaningful scale as a business. You need to be able to be a multi-billion-dollar company, at least, if not more, with a clear path to consistent growth. You need to be profitable, especially in today's market. And I think there aren't a lot of companies who are going to be the next Pepsi or the next Facebook. Or have a management team that can weather the ups and downs of it, like a Tesla and Elon Musk. And so I definitely don't think it's the be all and end all. I think it's an amazing outcome for the right companies, many tech-driven companies for sure. But I also don't think it's accurate to say that companies want to stay private longer. I think we're starting to see a lot more activity pick up in the M&A space. We're starting to see a lot of inbounds at our portfolio companies from strategic businesses and strategic acquirers. And I think just based on the data we're seeing, I think we're going to see a lot of M&A picking up from private companies. And I think these companies, a lot of them want to start seeing those exits. And the ones who have been able to weather the storms of COVID, and then all the rise and the fall of the markets, and now tariffs. I think there's a lot of companies out there. If you're still a healthy company through all of that, and you have growth and profitability, you're probably looking for an outcome sooner than later.
Are you nearing any deals for the companies in your portfolio, and how do you know the time is right?
There's a mentor of mine, Lou Frankfurt, who was the longtime CEO of Coach.
Oh, yeah, he was he was one of the first. I used to be a stock analyst, Jason. He was one of the first people I talked to. So,
really?
Yeah. If you see Lou, tell him I said hi. It was fascinating.
I was just met with him last week, and he has a new book coming out. You should have him on.
Yeah, absolutely.
Called Bagman, and I started reading the preview. But the first chapter is called Magic plus Logic. This is something he always talks about when I'm speaking to him. Is you have to be really data driven and really focus on the numbers. But there's also a magic to great companies and great decision making. And I think that's how you decide is you have to have a combination of both. It's an art and a science. And then there's also just the reality of how long have your investors been in your business? How long are they willing to stay in your business? Do you have debt? Is it terming out? What does your capital stack look like? Are your employees eager to get liquidity? And so there's a million factors that come into it. But like any investment, even in the public markets, when's the right time to buy? When's the right time to sell? You don't want to hold on to it too long, and you don't want to go too early. So you just got to find that window.
You also invested in LeBron James's and Maverick Carter's SpringHill. What's next? As LeBron enters the next chapter of his life, his business career, what are you thinking we might see from SpringHill?
Yeah, so SpringHill was really the first big investment that we made from SC Holdings, and we've been close partners with Maverick and LeBron ever since then, and done a lot of other things with them. We acquired Canyon Bicycles, the biggest direct-to-consumer bicycle brand in the world. Another form of innovation. Certainly, bikes have been around forever, but nobody was shipping a bike directly to your house and doing it at large scale and generate meaningful profits. And Canyon has been doing that for a while. What's next? I don't know. LeBron's one of the most talented people in the world that have ever been around on and off the basketball court. That's for him to decide. I just try to find some great deals around that, and his partner Maverick Carter, who I work with, 99% of the time on that partnership and speak with every day, is the ultimate entrepreneur. SpringHill's been very successful. They actually merged last year with Fullwell Entertainment, one of the largest and best producers of live entertainment in the world. They were very involved in the Olympics last summer. They'll be doing the Olympics again in 2028. And so I think SpringHill will continue to be super successful as part of Fullwell in their new merged company. And I know for sure Mav will continue to be a cutting edge entrepreneur and push the envelope in everything that he's doing too.
What makes them good at what they do in the world of business, having studied them up close and personal and talking to them?
They're very, very curious. Mav in particular is constantly trying to learn new things, travel the world, meet new people, and absorb it all like a sponge, and then act on it. But I think it's the constant curiosity that they have and wanted to learn and want to get better at everything that they're doing.
If there's another company in your portfolio that's about to hit it big, what is it and why? Or lesser known outside of the Athletic Greens and the Hyperice?
Well, I would say one area that we're very focused on right now is youth sports, and we're just in the process of completing a new acquisition in this space. So I can't say what it is yet, but there's recently an article in the New York Times talking about how youth sports is an asset class now. It's a $40 billion industry. And I think we're still at the very early stages of the professionalization of youth sports. And it's, to me, one of the best industries in the world because every kid should be playing sports. It's the best thing you can do as a young person for not just physical wellness, but mental wellness as well, for building confidence, for having purpose, for meeting new people, for experiencing diversity of people from all walks of life, also perseverance and work ethic. So it has such a positive impact on all of these people. And I know firsthand, my son, who's 10, is very into the youth basketball world. I actually just got back from Orlando for the AAU World Championships, watching his 10-year-old team play with the best teams in the world. And there is a huge opportunity for continued professionalization of this space that is a $40 billion industry, but has typically been very driven by small businesses, local businesses that could benefit and want to benefit from a more intricate and dedicated infrastructure and take advantage of all these opportunities. So we're going to be going into that space. I will say that basketball is the number one participation sport in youth sports for young people in the world. It's in America. Sorry, it's bigger than soccer. It's bigger than baseball. Almost 2x both. Outside, if you go outside of America, soccer is the biggest, but in America, it's by far the biggest youth sport, and that would be an area we'd be very interested in.
I remember it's amazing what kids have at their disposal now in sports. I had a $25 bat from Sears and a $10 pair of cleats from Kmart. I just didn't have any of that growing up. But I would love to get you.
I played at the park. I played basketball at the park. That's how I learned how to play basketball.
Yeah.
These kids today have dedicated trainers, personal trainers, group training. The U.S. system in basketball has learned a lot from the European system that has produced all these amazing players where they actually practice 6 days a week and play games once a week. In U.S., they practice once a week at these youth levels and play 8 games on the weekend, and you don't get better doing the latter. And so there's a huge movement here toward that. And I think, again, you'll start to see the professionalization of youth sports become a huge topic. If college kids are getting paid to play sports millions of dollars a year, why would we draw the line at college, and why would high school kids also be getting that? In Europe, if you're a great basketball player, you start playing professionally as a teenager. You get to be part of an academy. Luka Doncic was playing in Spain, I think when he was 14 or 15 years old. Rubio, all these guys start playing at a younger age. And so if these high school kids are huge celebrities online for the younger generations, I can definitely see a world where there is a professional high school basketball league that has a media rights deal, that has sponsorship deals where the kids are getting paid. And so, I mean, there's a million directions we can go in with this topic, but I think it'll continue to be a very hot one in the U.S.
Well, keep us posted when you announce that one. And Jason, lastly, we always like to get a hot take from our guests. Nothing planned. I'm just going to pull it out of thin air here. Just giving your exposure to Hyperice, recovery products. And of course, I have a vested interest in this. What's next in that space? So I go to Hyperice. I get something that goes over my knee. It cools my knee down. It heats my knee up. I've got bands that go around my back. I've got massage guns. What's the next holy grail product that will make me feel 22 again?
I think the next, well, so you asked 2 questions. I think the next step for that space is the integration of these technologies into your everyday clothing. And you started to see it with Hyperice's big partnership that they announced with Nike, where they now have a sneaker that has their Normatec compression technology inside of the sneaker.
These shoes have been blowing up my Instagram feed. I don't know if clearly Insta knows what I'm searching for. I mean, they have my number.
If you haven't tried them, I will send you a pair. They're amazing. It's basically just like getting a foot massage 24/7. They heat up, they massage your foot. So if you've just played sports and you're sitting on the couch or on the bus on the way home from a game, if you're an athlete, you put them on and they get you, they're great for recovery, great for a warm up. I think you'll start to see more of that. I think if you look toward Hyperice's partnership with Nike, which has been a huge success, you can start to think about all the different technologies they have and all the ways it could be applied inside of clothing. Could it be in a running vest that you're wearing? Could it be in a hat? Could it be in sandals? Could it be in socks? Could it be in your compression shorts or your compression pants? I think you'll start to see with the way that with as small as chips are getting and as this technology evolves, more and more of these utilities in wearable clothing. In terms of a technology that is coming next in the space, this is not new, but if you're not cold plunging, I think you got to start doing it.
You're playing, right? I'm eyeing a cold plunge, Jason. It has to happen. They're a little expensive. They're like $6,000. So, I'm not exactly made of money, but, I might have to pull the trigger as a treat for myself.
The way I got started doing it is buying a bag of ice for $4.99 at the deli down the street in Brooklyn and throwing it in my bathtub. So there are inexpensive ways to get addicted to this habit. But man, once you jump in there, your dopamine boosts. It's hard to not feel good after the day after that. So I would push hard for that if you're not doing it yet.
All right, fair enough. We'll leave it there. Really enjoyed this conversation. Jason Stein, co-founder and managing partner at SC Holdings. We'll talk to you soon.
Thanks, Brian. Appreciate it.
All right, that's it for the latest episode of Opening Bid Unfiltered. Continue to hit us with all those thumbs up on YouTube. Love all the feedback. It makes me a better interviewer, and I just love learning from you all. Also, continue to enjoy Opening Bid Unfiltered on all the podcast platforms. We'll talk to you soon.